Good afternoon, ladies and gentlemen. If you are still in the room, can I please ask you to take a seat? This is a thrilling conversation to end our day here in Lab 4, or as one gentleman said, the real issues, right, to discuss at play. We're going to be talking about the future of impact investing. So with the global impact investing market surpassing $1 trillion, the focus on aligning investments with social and environmental change has never been greater. We'll discuss how investors can identify and support startups, we were talking about startups here, and the energy in the kingdom right now with the potential to solve real-world problems and create lasting impact. And for that, I have an amazing panel joining me. Cate Ambrose, CEO of Global Private Capital Association. Welcome, Cate. We have Dr. Lourdes Rodríguez, CEO of the David Rockefeller Fund. Sophia Swire, Managing Partner and Founder at GEDI VC. Y Rodrigo Tavares, CEO of Granito Group. Welcome. All right. Thank you. Let's give them a big round of applause for being here. Rodrigo, I'm sorry I misspelled your last name. Rodrigo Tavares. As a fellow Spanish speaker, I'm a stickler for,
I'm Portuguese,
for pronunciations. So we're going to kick it off with Cate, who's going to set the scene for us. So Cate, I mentioned that impact investing has crossed $1 trillion. With your leadership at the Global Private Capital Association, will impact investing truly become mainstream, you feel, surpassing traditional investments?
We're already there, frankly. I've actually been around long enough, Mariana, to remember the year of microfinance at the United Nations like 20 years ago or more, when the narrative around impact investing was a bunch of women in Africa sitting around weaving baskets. Today, the world's largest asset managers, KKR, TPG, Brookfield, others, are launching dedicated impact funds. So what is impact? I mean, this is really the question. What are we talking about when we're talking about impact? And I've noticed in particular that over the last 3 or 4 years, as there's been a bit of a backlash against the ESG terminology, which is what private equity used to use in the US, no one wants to be ESG, no one wants to be woke anymore, that they're all adopting that impact terminology and raising these funds where they have dedicated impact metrics to be able to raise capital and kind of prove, that they're actually delivering on something tangible. Having said that, money is the ultimate commodity. I mean, yes. At the end of the day, there are trillions of dollars floating around the world economy. And whether you're investing with an impact lens on or ESG or just as a pure commercial investor, your money is having an impact. What are you investing in? How are you compensating your employees? What's the gender balance of your workforce? How are you thinking about sustainability? There are so many practical impacts because we're not talking about investing in public exchanges, at least in my world. This is private equity and venture capital. We're talking about real businesses on the ground around the world. And I've also noticed this just very significant trend that anybody can put climate fund or impact fund on the cover sheet of their marketing materials, but there's much greater accountability around how that money is being invested and trusted partners. So much of it is, what is the manager's intention? Rules versus principles, right? Who am I giving my money to? And do I trust this fund manager to invest this money well and accountably? And what can I see underneath that at the end of the day?
And that's a critical word, which is trust, right? Pivotal for this conversation. This question is for Rodrigo and Sophia, actually, for the both of you. You both have expertise in emerging markets, in sustainable finance. Which specific markets within the global south do you see as the next hotspots? Rodrigo, you're Portuguese, and Sophia, you also have a lot of experience in places like Afghanistan. So if you can go ahead.
Please.
Shall I go first?
Yes.
Okay. So Afghanistan is probably not the place that you want to make any kind of financial investment right now. You can have your social impact, but without the financial sort of liability, I would say. There are other places which I think are booming economies, and for me, the most exciting place on the planet at the moment is Saudi Arabia, the GCC, and the extended MENA region. And there are reasons for that. One is that there's an unspoken renaissance. I think in the West, the media doesn't really acknowledge the rise of the Arab female leader. And we've seen that across politics, across leading companies. Here we have Princess Rima, who's one of the most distinguished Arab women leaders. But also in the MENA region, the majority of graduates in many of the universities are women. The majority of engineers in Palestine and in Tunisia are females. There's 60,000 STEM students who are studying for, climate solutions and so on in countries like Morocco. So there's the whole immersion ecosystem that is not yet getting funded. I think there's an enormous opportunity here. In the Middle East and North Africa, only 0.47% of funding, private equity and venture capital funding, goes to female founders. So there's an enormous chasm between talent and opportunity.
So women in the global south. Rodrigo, on to you. You are from Brazil.
Portugal.
Portugal.
So for me, impact investments is about investing in companies whose products and services generate positive impact, and that impact is measured. So it's important just to frame it from the very beginning. That question typically arises: if I'm an impact investment fund, where shall I allocate my capital? What are the areas? What are the geographies? And I'll say three things. Number one, if you are an impact-driven impact investment fund, if your cause is impact, if you are driven by impact genuinely, then the choice is very easy. You just look at the funding gap of the Sustainable Development Goals from 2.5 trillion to 4.5 trillion. 85% of the Sustainable Development Goals indicators are hopefully off track.
Yeah.
So if you're driven by impact, just allocate resources and generate opportunities within the Sustainable Development Goals territory. But most impact investment funds, they are not necessarily considering exclusively the Sustainable Development Goals. So statistically, if you look at the GEIN and the pitch book, as we speak, most impact investment funds, they are allocating resources to number one, climate and energy. Number two, water. Number three, healthcare. Number four, sanitation. And number five, agriculture, by that order. Is there a problem with this? Yes, because statistically, most capital is going to climate and to energy, and it is generating some imbalances in the market. If the question is, where would you put your money? Not where the money is going to go to. If you had an impact investing fund, what are you seeing in the market at the moment? Where are the opportunities? And I'll say four main ones in 30 seconds. One is energy transition mining. The only difference between, or the major difference between high carbon economies and low carbon economies, it's a shift in dependencies. We are shifting our dependencies from oil and gas to other types of minerals, from lithium to nickel, from graphite to rare earths. So there are plenty of opportunities with sustainable mining and mining energy transition minerals. While here in the kingdom, Manara and Mahadan, they are heavily devoted to this field. Number two, healthcare funds, longevity funds. 1 in 6 people by 2030 will be above 6 years old. The third one, climate activist funds. There are plenty of them. There are hundreds of them as we speak. In Latin America, US, and Europe, they push their companies to embrace sustainability and climate practices in order to unlock financial value. And number four, as I see as an opportunity, number four is agriculture and forestation. And a good example of that is here in the kingdom. So the kingdom is aiming to plant 50 billion trees in the region, 10 billion trees in Saudi Arabia. It's aiming to restore 200 million hectares of degraded land. It's aiming to protect 20% of its territory. It's aiming to decrease its carbon emissions up to 278 million tons of carbon emissions. So there is plenty of opportunities here that the world should be paying attention to.
Thank you for that, Rodrigo. Doctor, on to you. You lead, obviously, an enormous fund that is greatly influential, philanthropic organization. How can philanthropic organizations like the Rockefeller Fund use their endowment to create value for the actual mission of the organization?
Salam alaikum. Thank you so much for having me here. Buenas tardes. when I think about the work of philanthropy in general, but in the case of US philanthropy, oftentimes we focus on our grant making to the detriment of thinking about our endowment and how it's invested. So for me and at the David Rockefeller Fund, we think about how can we advance our mission, our program areas, by also investing our dollars in ways that advance our mission. That's how we define impact within the context of our organization. So for example, we support work in the climate space, and we started our journey by divesting from fossil fuels 10 years ago, and last year we signed on to the Net Zero Asset Owners Alliance. And for us, investing in decarbonization is one way to achieve mission on the programmatic side and using our investment. And one of the things that we are working on is encouraging other philanthropic organizations to think about how they invest their endowments so that they too can be involved in growing the amount of dollars that go towards impact.
Thank you for that, Lourdes. Cate, on to you. Impact investments have outperformed traditional assets recently, but some experts warn that the current market correction will punish them more severely due to their limited liquidity. With your extensive experience in global private capital, is this a valid concern in your view?
I mean, we're living in a world where it's going to be much more difficult to invest profitably. And I'm going to come back to your earlier question around emerging markets. The organization that I run actually represents investors investing not in the US or Western Europe, but Asia, Latin America, Africa, Central and Eastern Europe, and the Middle East. And the US is a market where highly levered. The way private equity is done, it's a ton of debt. Low interest rates were driving that bubble and that boom, and you didn't really have to do very much. I actually heard a very prominent investor say once, it's not rocket science. You time the cycles and pile on the debt. When you go to the rest of the world, when you go to Asia, when you go to Africa, when you go to Latin America, there is no debt, there's no leverage. It's not financial engineering. You have no choice but to roll up your sleeves and build companies and create operational improvements. Also, I've really noticed this. There's a much easier regulatory, it's counterintuitive. People think that it's more complex to invest globally. The US is a very difficult market to do renewable energy in. There are many other places in the world where you can work more compatibly with governments, and there's a better opportunity to work in those local markets. So when we were talking about healthcare and climate, those are two major fundraising drivers right now for private capital investors. There's an enormous opportunity to create access to energy in regions like Africa, decentralized grids, solar panels, replacing, the crisis that we're seeing in South Africa with private capital stepping in there, and you're actually building something real. I want to bring this home with my last comment, but to workforce and employment, and here in the kingdom in particular, if I have one piece of advice for this country, you do not need to follow the model that has been created in the US. Don't think of the typical asset management, rules, or put the gurus or icons that we've, followed in the past. Find solutions that come from the rest of the world, but focus on what are you actually building? If you're building luxury hotels or whatever, what kind of jobs are you creating? The human capital piece of this, right? Not only climate, but how are you training people? What's the gender balance? How are you compensating people? Are you giving people a living wage? And how is that going to be recycled back into the economy? I think Saudi Arabia has an incredible opportunity, very exciting place.
Preach, Cate. That was wonderful. We have less than 10 minutes left. If any of you guys have a question for our amazing panelists, please feel free to raise your hand. I'm actually going to go to a question for all of you. And Cate, you touched on human capital. You touched on what kind of a workforce are we really investing in? So let's talk about, the next generation. What does the next generation of philanthropy look like? Rodrigo, I'll start with you.
I don't combine philanthropy with investments. So for me, philanthropy is something radically different from investments. So when we're talking about investments, it's about making money. And let me make a suggestion. We have spent the last 20 years or so trying to make money out of impact investments. And we have externalized ESG. And there's a lot of discussion about ESG and impact. and how to measure impact and how to measure ESG. The proposal will be the following. If you are a company, there are plenty, thousands of different ESG indicators that you can actually improve. If you're a company, there are dozens and thousands or hundreds of potential impact indicators that you can pursue. Is that technically possible for a company to do everything on its own? It's not. And some of those impacts and some of those ESG risk indicators, they generate financial benefits. So I think the future of ESG and the future of impact investment, it's about determine with precision, with mathematical precision, what are the impacts and the ESG risk indicators that can actually generate a positive impact on the solvency, on the liquidity, on the profitability of a company. And those, and only those, and exclusively only those indicators, then they should be weaved back into our financial models that account for value, that account for margins, that account for CapEx, that account for OpEx. When that is done, when ESG is financially relevant, when impact is properly measured, and it's properly reintegrated into the core business of the company, then we're going to stop talking about impact investing, and the future of impact investing, it's going to be called investment.
I can pick up the question that you posed earlier.
Go ahead.
And go from your comments, Rodrigo. When I think about the role of philanthropy in the investing space, I think about how we are not driven by, big earnings. We are driven by mission. So we can take risks that other investors, other types of investors, are not willing to take. So when I think about the next generation of philanthropists who are highly involved, who want to be able to support goals that are not only about earning generation, but about creating social impact, I think about how we are positioned to forego some of the high returns in service of getting to some other goals that perhaps right now people are shying away from. I don't know, is that what you were trying to get at with your question?
I appreciated your point of view. Anybody want to refute what Rodrigo said in terms of?
No, I actually am spot on, because it's not about impact vesting versus commercial investing.
Yes.
It's just, what are you investing in? And it's public markets versus private markets too. When you're investing in public markets, it's an index, it's very difficult to follow. When you're investing in companies, you're building something from the bottom up. Again, it's all the pieces that I was highlighting before. How are you hiring people? How are you compensating people? And then in terms of the generational shift, so much wealth has been created. China has many, many billionaires. India is minting billionaires by the minute. Right. There are so many billionaire families in Latin America. The sons and the daughters of those multi-generational families care much more about having an impact with their money. And I've seen sons and daughters of some of the wealthiest families in the world go out and say, I'm going to raise an impact. I'm going to execute this by doing an impact fund. They don't want to just do philanthropy, because philanthropy feels old. They want to be venture capitalists, but with impact. They want to do something meaningful with their money, and I think that's a great opportunity.
It's not charity. It's
right.
Exactly.
Right.
Sophia, I want to touch on something, which is, we've talked about AI a lot, obviously, during our time here at FII 8. Can tools like AI or even blockchain enable real-time assessments and provide the transparency that we've been talking about into true impact of an investment, and even before financial returns are realized?
Absolutely. I mean, through blockchain and AI, you can have real-time information. So there are companies that we're looking at in the US and elsewhere that are at the cutting edge of this. There's all female-led, of course. One is called Proof of Impact. Another is called Munch. And then there are others popping up here and there. And they use sometimes drone technology and AI-powered surveillance, cameras and so on, to provide real-time feedback. We see that also in terms of enabling ag tech startups to provide real-time feedback. And that obviously is going to enable people to deliver far more flexible solutions, far faster. But I also just wanted to touch on the other question, if I may, regarding philanthropy versus impact. because I've run a philanthropic organization now for 30 years, and I'm also an impact investor. And I would disagree with Rodrigo in the sense that I think there's a spectrum of impact investing. And I think that there's a specific role for philanthropy and a specific role for deploying capital where you expect a return. And an example would be an amazing young female founder that I spoke to. She came up to me after the last session, a girl called Rowan, who set up a company called IX Meta, which is an edtech, full immersion edtech company here in Saudi Arabia. And I was saying to her, I hope one day we'll be in a position to invest in you. Our future fund, GEDI, will be looking at emerging and frontier markets. And she said, no, but I want to work with you on the philanthropic side. So we worked out that what she has is an incredible opportunity to develop a curriculum, an AI-supported virtual reality curriculum, to train hundreds of women nurses and doctors in Afghanistan where they don't have access to high-quality training. And that's obviously something it's a role for philanthropy to fund such a thing. So
That's great that those kinds of connections are happening here at FII. It's what the conference is all about. I'd like to finish with a quick lightning round, if you guys will appease me. And Cate, I'll start with you. When you think of impact investing, what is one sector, one industry, or one area of the world that you're particularly excited about right now?
I'm just going to jump on this theme of moving out of a US-centric mindset. The organization that I run was founded as the Emerging Markets Private Equity Association. I said, I'm not running anything with that terminology. China's the world's second largest economy. So I'm excited about seeing solutions that come out of the rest of the world. And I live in New York. That's not to take anything away from the important role that the US can still play here. But if people want Global South solutions coming from other parts of the world.
I love that.
I will
Lourdes?
quickly say that I agree with you that philanthropy feels old and stuffy. So for me, the challenge is to invigorate philanthropy so that we think about not only our grant making as creating impact, but how we're using our investments as creating impact.
Sophia?
So for me, it's about harnessing private sector innovation to solve humanitarian problems at scale. And what interests me right now is the train that's coming down the tracks with regards to human displacement, whether through conflict or climate. There's going to be approximately 1.2 billion people displaced by 2050, according to the Institute of Economics and Peace. And the traditional humanitarian responses, the traditional philanthropic resources are insufficient. So I believe that we need to invest not only in climate, but also in mental health and well-being. For people who are traumatized by conflict, we need to invest in edtech, education, health of all sorts, and also fintech, because the unbanked, the people who are displaced from their homes, they also deserve an opportunity to have some human dignity and to participate in the global economy.
Rodrigo, you get the last word.
So for me, impact investing and ESG investing, it's about either compliance or mathematics. Everything else is clutter. It's a distraction. So on that note, I would say that the trend is towards measuring the impact of a traditional portfolio, highly diversified, all asset classes, all geographies, even with passive investments included, which account 48% in the US, by the way. So the future of impact investment, it is about our trend, our capacity to measure the impact of a full spectrum portfolio rather than increasing the assets under management of impact investing. And then at the very end, everything comes down to one very thing. There are a lot of expectations on what impact investors or investors in general can actually do and achieve. The bar is set very, very high. For me, investment, I think we should come down to the fundamentals. We should be back to the fundamentals of investment. Warren Buffett used to say that it is possible to run a business profitably and ethically. There is no contradiction between both. So if you ask me, what's your expectation for investors? It's just that. Make money, do it well, do it ethically, and that's about it.
What a great way to finish.
Yeah,
Thank you
that's
so
great.
much to my fabulous panel, Rodrigo, Tavares, Sophia, Swire, Dr. Lourdes, Rodríguez, and Cate Ambrose. Thank you so much. I'm going to ask you to exit stage right. Watch out, watch out, watch out. Thank you so much. Thank you so much for attending, everybody. I will see all of you for an exciting day 2 plenary tomorrow, which I will be hosting. So I'll see you bright and early tomorrow at 9 a.m. Thank you so much. Muchas gracias. Shukran.